right, what do you got?
There you go, guys. Matt, you run
Where
the
we at?
conversation for a minute.
Ira, that was a lot of interesting things going on in the last week, and I especially really enjoyed. I loved Alexandra's she had 2 articles out in the last couple of weeks, right?
2?
She did-
20, and they've been putting her on TV. I can't believe how much she's exhausted.
Yeah.
I know she was a little testy the other day. She gets testy with her father.
Oh, she should never
Which
do
is
that.
okay. Which is okay. Raising 3 teenage daughters, yeah, I know about testy.
Ah, she was great. She really was great, and I was so glad that it was one of those things where I was just sitting there watching. You know, I happened to watch, and oh my gosh, there she is, and I taped it.
Yeah. Thank you. Yeah, she's been working on this for years, and I said, you know what? Everybody's time comes. Everybody gets their moment. I said, you're prepared for it. She says, yeah, it's really grinding. I said, yeah, just watch yourself though, because you're on a lot of issues where people get very sensitive about, and certainly when you get and you're challenging people with that, you got to be careful, because a lot of egos and fragile human elements. So just proceed along, and if you know your stuff, you know your stuff. It's like being a trader. You know, and put it to work, and realize that it's this time. Interesting. I saw the 2-year auction results just came. They were really good, very good. I'm surprised the 210 really didn't move out more, but whoever's still buying the long end of this curve, beyond my scope, how you can possibly buy this as an investment. In fact, John Others, who I love, who used to be at the FT but is now at Bloomberg, wrote a really good piece about the long end of the bond market today. So worth a read. Okay, what else we got going on?
So I've got one for you.
Hit away.
So John Williams shows up in New York.
Yeah.
First day, Simon Potter goes upstairs and says to him, listen, get a Bloomberg terminal. You're going to need one. Williams says to him, screw you. I'm sticking with my HP 12C. Oh, and by the way, you're fired.
Yeah, I don't know that to be the case, but how do you got that? I have no idea if that's
I made most of that up, but I made it all up. It's just that Williams is known for not having a Bloomberg terminal on his desk, and you can't do that in New York, okay? And from the way I understand it, Simon Potter was fired.
Well, I don't know that to be the case. Well, let me tell you about a guy who I know. Let's call him AK. And he famously said to somebody who I know very well, when they asked him, why don't you have a Bloomberg terminal? And he said, and this is a guy who was a big hedge fund trader at one time and a huge bank trader. He says, I know where prices ought to be. I've never forgotten that comment. It's one of my favorite comments in the foreign exchange world. I know where prices ought to be. So,
Ira, you're the only person I would trust to say something like that.
No. Anybody who would say something like that, run as fast as you can, because nobody knows where. You know what? As Alan Greenspan famously still says, foreign exchange is like flipping a coin. I've always taken great umbrage with that, but foreign exchange is very difficult because there's so many variables, which is why I love it. I mean, it's complicated. It's always changing. It's always in motion because of the vast amount of variables. And I still love it. I go back and read papers I wrote 40 years ago, and or 45 years ago, and it's still. I love it. It's really, people say, why are you still doing that? I said, because I love it. Once it's in your brain, it's like people who say, oh, you know what, we're going to make the world non-nuclear. Really? You could put that genie back in the bottle? Explain to me how that happens. I know what I know, and I'm always learning. I'm never content with what I know, but it's quite fun. But nobody knows where the market ought to be. Because if that was the case, we should all retire because there's no opportunity here.
All right, I'm back.
Okay, where you lead this discussion, where have we been going? What have we been discussing?
Well,
it's short.
Yeah, it was all short. I mean, I started selling them when you started talking about it last week off your daughter's article. And
yeah. I was, I was actually, I was long beans and short S&Ps. I just covered them today. I said, well, I'll be long the beans if we get a trade deal. And then, of course, Mnuchin, who I think is on a very short respirator right now.
That's what I wanted to ask you about.
Yeah, okay, because I think he did. I think today was a day I was in agreement with Kramer, which is a highly unusual day. But I think Kramer had a few things right. I think Mnuchin is running afoul of that was a huge mistake because he didn't tell him that he was canceling it. And we saw the action. I mean, it wound up working right because the S&Ps broke Friday afternoon on the same news that why the beans broke off that run up to into the high 890s and then closed down at 882. But interesting because I thought the only way I could get hurt on short the S&Ps was with the grains, but the beans were starting to look good on their own. So there was some method to that madness. It was kind of crazy. But I told you, Judd, that was the first time I'd gotten short in quite a while. But I didn't. I'm out right now because I don't like too much. Too much of it is coming off the impeach discussion, which I guess has some legs, that Nancy thinks that she's really played this well. I don't have a problem with that. She's been very smart about this. But she feel that she better get some Republican support though. She can't go this alone. It would not be a good political move to go it alone. But let's see, I didn't watch his speech. Was that to the UN? Yeah, I guess it was to the UN today. But I did see some of the other pieces of it. Whatever. This is going to be an ongoing thing. But yeah, it's driven this market. So right now I'm out for a little bit. I was more interested to think, did that impeachment discussion drive the gold rally? I think it did. Gold silver corrected from yesterday's monstrous move, but it seemed to have driven the gold rally too, which I don't like when certain things, on this political. Now we got to wait till what time is that? 3 o'clock Eastern time? What time is she having her press conference?
I'm not sure.
I think, yeah, be attentive to that. I think it might be 4 o'clock. It could be whatever. It's coming this afternoon. Or she's going to announce whatever her intentions are.
I mean, the other thing we were talking about here was the fact that, we're basically where we were a year ago in the indices.
Yep.
So for all these people that are telling you that, hey, Trump's the greatest thing, it's been the greatest thing since sliced bread. If they didn't get in and out and trade the market, they haven't made any money. And not only that, a lot of things they're down money on.
And I'll tell you, the bond markets are I can't take you, as you guys know, because I've said it. I don't like this recession discussion because the definition of a recession by the ridiculousness of the National Bureau of Economic Research. We saw it with Germany. Remember, Germany avoided the official recession because they had 0.1% growth the second quarter, which the first quarter was negative growth, so therefore they weren't technically in a recession. I don't care if the economy's slow. Do I care if the economy is growing by 0.1%? No. If I'm, no, it's preposterous. So these official discussions, I don't care. I don't care. But what we have seen, of course, Judd, is the bonds. Well, the bonds really weren't. The bonds took off, meaning yields rose, and people forget this, in conjunction with the S&P break. That's what made the last year's fourth quarter so painful for so many, because the people who were in the risk parity trades got killed, because, you know, they're long, because that's the all-weather basis, and neither side was working. Now at least, you know, I'm so in disagreement with this bond rally, or whether I'm in disagreement or not, as a trader, it's just opportunity. But I still laugh. I go, who's buying these bonds for an investment? Because again, you need your head examined. And
right.
You know what? Yes.
It's still off of last night's low in the bonds. That's all you got to look at, and that's all I've been looking at, and that's how I've been trading it.
Yeah. And, you know what? And I'm glad that Europe is down, because I tried buying the DAX a little bit last night and selling the S&Ps as a trade at work, but not like the way. So I'm just waiting. The European trade will be based on a huge fiscal stimulus. Discussion just keeps ramping up and ramping up and ramping up. But I'm really at my place watching, and again, as I wrote last night, and then just briefly, it is interesting. Equities.
Larry, you're fading in and out.
Sorry, it must be in a bad spot. Me now. Call back.
Well, if we lose you, just call back in.
Is it any better?
Yeah, that's better. What are you on Lower Wacker Drive?
Going to get your car washed on 31st Street?
No, maybe tomorrow. But what is interesting that your equity market, when bad data comes out, gets hit. When bad data comes out in the U.S., the markets may fall for a minute, and then they go, oh, bad news is good news. We're still in the mode. I find that very interesting, because European equity markets have really suffered bad EMI numbers that have been out for, you know, that we saw. So very fascinating, which makes the power stimulus how much more important for the equity markets. You just have to be patient with it.
Well, Ira, since you're not in front of your screen, pit NASDAQ bonds as an ORL data confirm. The ORL and the NASDAQ, the S&Ps, they're all lining up. We're coming down into gaps on the daily stuff. You know, the point figures, all the matches are around in the mid 2940s in the SPOOs right now, which takes you into the 200 period average on the half-day bar. So it looks like the market will get down there.
And, you know, I'm glad we're talking about this, because last year, this week, that we talked about, and I wrote about the elevation on the S&P bond, and we had run up too far too fast. Remember, we got to around 20. I mean, I'm 21. It was 30% move in a year from that, from October of 2017 to 2018. That relationship had moved 30, which was a breakout, quarterly breakout of an all-time high. We ran up to what was the high the last week of September last year on that S&P bond.
Hold on, I'm looking at it right now.
I think it was 21 something. It was a significant. It signified a 30% move in a 1 year period, which was dramatic.
Hold on, I got to get the right input. There it is.
I am flying by the stars.
So that high was 2116, and then it put in the ORL month.
Right. And we still had huge correction come in the last quarter of last year, which made perfect sense, because that was a parabolic move, way too much, too fast. They were giddy. And that corrected. So it's good, because that should be a focus, and take that apart as to where we are now another year later. And that relationship has been really good. I know Pax has really done play well. That's why I bring it up. And I was looking at it too, and if you go look, if I believe the 200-week moving average is around 1634 red numbers spring.
Well, the other one too is even bigger, Ira, and it stands out even more. Is the hold on, just let me get this right spread bar up. It's the NASDAQ bonds off the continuation on the weekly when you got that spike last week on the roll above 50 for one day, and then that was it.
Yeah.
It's over.
We just had something's going on. We just had a bounce off the lows. We had a 20-handle bounce off the lows in the SPOOs and a 40-handle bounce in the Nasdaq, and the gold just broke $20.
Wow.
Well, no. $15. It's down to 134.
Yeah, and now you just put in a double bottom on the hourly in the S&Ps.
They must have determined that they're not going ahead with the impeachment.
I'll bet you.
I'll bet.
Skipper just put that in.
Let's see.
He says that I am currently at the United Nations representing our country, but have authorized the release tomorrow of the complete, fully declassified, and unredacted transcript of my telephone conversation with President Zelensky of Ukraine.
Okay.
And the yen pairs, all the yen crosses are correcting. The whole thing.
Give me a rally back up to the opening range. I'll sell them again.
Okay. All right, that's what's going on. All right, that makes so now I got to go home and discern what's going. So he's trying to head this off, and you see, I mean, here it is, the algo-driven headlines again, and this is why you got to be patient because things will work themselves through here.
Yeah, and it's going to take like an 82 or 83 print to put in a reversal back up on the 25 by 3-point figure and confirm that double.
Where's the smooth trading at? 29 what?
75.
Yeah. It's not that big a rally. What was the low?
For 58.
58?
Yeah, 58 half, and then it just bounced. So 20 point bounce.
Yeah.
About
to be expected. So we're still down, what, 28 for the day? How much are we down for the day?
20.
20?
Yeah, we've had, a 50-handle range.
Yeah, that's right. All right, but I mean, these are the things that are going to be with us. You can't get away from them because Trump, and again, as Kramer discussed today, and we've discussed it, there was nothing new in that. It's his ability to control the narrative. That's all he cares about. And you know what? The media should be friggin' embarrassed because it's chum, and they commit intellectual suicide every day with him because they just follow. That's what they do. They follow the bouncy ball.
They got him elected. They hate that they got him elected, and now they keep taking the bait. Every day. Yeah,
every day. He plays them. You know what? He plays them, and they do it, and they dance to his tune. And I know it's news, and that's what they tell you. And then they spend the rest of their day complaining about it. and as you know, anybody who's in the investment world, you're held captive to it because again, the algorithms are keyworded. And when somebody explains to me the proliferation of news agencies or news accredited bureaus go through the litany of them, they're out there. Who is this, and how do they come to write these headlines? You know, because they're all done to generate the greatest amount of volatility. And I'll stand in that until proved otherwise. Because here we go. You know, we're right in the middle of it right now. This is real time. Now we have a lottery going. When is Mnuchin tossed overboard? Because I don't think Trump liked. Trump must have not had wind of it when Mnuchin, when they forced the Chinese not to go to Montana and Wyoming.
No,
he wasn't aware of it. He was kind of surprised by it.
The look on his face was telling yesterday in that discussion when they were sitting talking, and you can see that Fredo looked visibly uncomfortable when he had to correct the president.
Yeah, that was not pretty.
Oh.
That was not pretty. And I go, and you know what? And it came out of nowhere on Friday. And then the Chinese. I read the South China Morning Post this morning, and they were saying, because they didn't have, we didn't cancel it. Well, yeah, it was the Treasury had canceled it. He was not happy. But I will tell you this: if Mnuchin is tossed, pay attention to what the dollar does. Because, I think it's been Mnuchin who's been instrumental in prevailing upon Trump, not to get aggressive in his jawboning the dollar lower. So that's one place I'm going to watch if Mnuchin's gone. Because that frees up Wilbur Ross and Navarro and it's I guess they're all the seven dwarfs. Can we find seven of them? Because I thought they showed that picture of Wilbur Ross sleeping at the UN today. Did you see that?
No.
He was sounding. Somebody ran it. I don't know. It was pretty. And I don't think it was a photo op. A photo. What you call it? Shop, but he was sleeping. So I thought that was interesting. That's what came to my mind. The seven dwarfs: Sleepy, Sneezy. We got them all.
What? Who's Kudlow? Dopey?
I don't know. They're all interchangeable parts, except I still have great respect for Bob Lighthizer.
Oh, I know you do. But every time I used to love Kudlow. Every time he started talking in the fourth quarter of last year, whenever they tried him out, I would just sell more. As soon as I saw him getting mic'd up, I'd sell more S&Ps. I still do it sometimes, not all the time. The Kudlow short.
The Kudlow, and bring him out. Bring him out. Yeah. Wow.
You guys are brutal.
Hey, Ira, I want to talk a little bit more about the.
So true, though.
It is true. But I wanted to talk a little bit more about repos. We started to talk about the repo issue a week or so ago, and then I think we got lost. But yeah, you dropped off the call. But it was something that as a clerk, when I was a clerk in the Eurodollars, when you guys were all locals before I started trading, we didn't take our break until after 10:40, after repo time. And then it all ended with QE, as I know, right? Or as I was found out.
No, it was. They were doing them, but nobody cared. They were inconsequential. The market had grown up way beyond that. Because there were so many other things moving in the market, and the euro-dollar market had grown so big. There was no T-bill market to speak of anymore, except in the over-the-counter cash market. So. They were there. They just, nobody cared. Monetary theory, as far as the M1s, the M2, people stopped being attentive to them because there wasn't a lot of opportunity with it. They were not significant enough part of the market. And then, with QE, they weren't for a different reason. But now, as Jack Nicholson would say, I'm back. We'll see how long they sustain themselves here. Again, because there is a lot of people say everybody's trying to put a handle is to understand exactly why. Why aren't the banks lending? What is going on here? But it is the confluence of events And really, I will. Chris Whalen was on today on at 11 o'clock show. I forget what they call it. When the Nigerians.
The halftime report.
Yeah, and Whalen's always good. Of course, they didn't let him talk enough, but it's hard to talk to. It's hard for people to let you talk when they know everything ahead of time.
But he basically said, Ira, that the banks are done lending for the rest of the year, and it's only September.
Well, and there's a guy. That's the guy. He's a go-to guy for me. As to understanding the plumbing of the banking system. Chris Whalen is just great, and he's telling you that. And it is. He wrote a long piece the other day talking about the regs driving this. That
LCF or
LCR. LCR, the liquidity coverage ratio and the need for banks to hold on to cash to be in that position is wreaking havoc here. But he's been on there for a long time, and now it's come home to roost, so he feels pretty strong with it. And it's certainly one of the variables driving this. So he's a guy you pay attention to. I wish they would have really let him stand the whole hour because he really had things to say. But a couple of, stock traders aren't necessarily desirous of hearing that. So,
and I mean, his other point, Ira, was that, well, not just his, but like Danielle DiMartino and another guy, George Goncalves, the tremendous issuance of short-term Treasury paper, and the dealers are stuffed with it.
I'm good, and we're going to end it. This will be the last thing I speak about. It's a very good point to go to, because if they would do this right, they could actually steepen out the curve. And I read I tried to go recover the article. I couldn't recover it. But the TBAC, which is the Treasury Borrowing Advisory Committee, actually is suggesting that maybe they should extend the duration. Well, if that's the case, then in order to steepen these curves, it's really pretty rudimentary. The Fed could buy everything 2 years and less, and let the Treasury issue mega amounts in longer duration, and that would steepen the curve. If that's what they want, if they set up, as Alexandra has written about quite a bit for the last 2 years. Because she keeps asking the question, why haven't they sent up a permanent repo facility? Because if you knew that you would do it, then you would extend out the duration. They've done everything they can not to let this work. So if they, in fact, were interested in that, they could do that, especially because the Treasury has been offering just mega amounts of short-dated stuff rather than extending out. And Larry Summers is one of the things he's been screaming about. Why aren't you extending your duration? Forget the 50-year. The 50-year is only going to change the average for you, which may not necessarily, that may be a nice optic, but it's not what's going to do the job. So,
they're causing a bear steepener at the moment.
Right, which is okay. You know what? Whatever way it steepens, yes, it'll raise some mortgage costs. What borrowing needs to say, this is what some of the more intelligent people, Bookvar and Jimmy Bianco, this is what they've been talking about. You've got to have. This is capitalism. We live in a capitalist system, and borrowing rates have to mean something. Borrowing costs have to mean something. Otherwise, you know what? Then, hey, just go to MMT and just throw money out, because if borrowing costs mean nothing and everything's free, then capitalism can't possibly work. Because if you don't have a profit potential, who's going to borrow money? Then the state is going to have to own every entity. So I think highly critical, but that's a very important point, and I'm glad you brought that up, because that really needs to be looked at here. And they've end your arrogance. There's just too many arrogant. They don't want to be challenged. And we don't. That must have been Pax who started down the road with Simon Potter.
Yes,
right?
it was. Yep.
You know what? And I'm a Simon Potter fan. I was a Brian Sack fan before that. The guys who ran Soma, because those were the last until Simon got fired. But I'm a Simon Potter fan because he's got his PhD from Wisconsin in Madison in economics. So I'm a fan. But so does Mary Daly. So I'll have to think about that.
I mean, but he's the guy, Ira, that, I mean, you know, he's the one that had to put QE together and make it work on the desk, on the Soma desk.
Right.
He's no dope.
No. And we still don't have an answer as to why it was a quick departure and with what's his name who went with him. So now we'll watch Lori Logan, who from everybody I hear from is very bright and is capable, but something is amiss. And I don't know what it is. I have no idea. But something's amiss in its operation. And
but there's people, Ira, that think that Williams is not up to the task of putting together some sort of a longer-term strategy to address these liquidity issues. Because if this continues, they're going to have to work out some sort of longer-term solution and not make it look like the banks are being bailed out again.
Well, you brought the guy from the Fillmore West to the Fillmore East. I was always a Fillmore East. I was always a Fillmore East fan myself. So even though Wall Street has its own problems, and Bill Dudley has not recorded himself very well here, by the way. I don't know what mission he's on. He got slapped by a lot of people, and he ain't taking it. He's firing back left and right all over the place.
I listened to that this morning on Bloomberg.
Yeah, he ain't laying down. You know, it's like in Cool Hand Luke. Stay down, Luke. No, I ain't staying down. He's up counter punching. This is really interesting. So, as a Fed watcher, I do enjoy it. So, because you'd think he would just go quiet, but he ain't going quiet. You know what? I may come. Just send me an email if for other discussion, because I'm going to get off. I got to do a couple things, and then I'll come back to you.
Okay. All right.
All right. Thank you.
All right. Thanks, Ira.
Thank you. Okay. Bye-bye.
Well, I've got to think that Simon Potter's departure, and I'll wait until when Ira has. I'm fascinated by this, by Simon Potter's departure. He's the most powerful man that nobody's ever heard of in the United States, except for
That's
trading.
true, Matt. That is true, Matt.
I know, and I'm fascinated at his departure, and now also with the repo system coming into focus all over again. I may have had it all backwards, but at least about how it kind of faded. But that's not my focus. My focus is why did Potter leave? He is literally the most powerful man in the United States that nobody's ever heard of, in charge of trillions of dollars worth of purchasing, in charge of QE and everything else.
As usual, we just had another enlightening conversation, and you can see that Ira's trading to make money because he got out down at those levels and just took his money.
That's a good example, Judd.
And that's a real good example of you got matches in the gold, the NASDAQ, and the levels in the S&Ps, and you just take your money and wait for another opportunity. And that's exactly what he did. And I'm sure that you and everybody else in your room did the same thing.
Yes, we did.
So, get another shot at it. Trust me. Tomorrow's a midweek shuffle. So, all right, I'm going to stop this recording, and then we can talk, because I don't want it to go too long for, just recording purposes. People kind of get lost with them. All right. So